Hello, Market Watcher. I'm David Ravel, and this, our look at Wall Street for Tuesday, February 2nd. First up, when shorting becomes an offensive weapon. Then it's the latest on retail sales from Redbook. All that, and our preview of the rest of today's corporate results, along with the latest news on the economy, coming right up. Well, there is a pernicious evil that happens when shorting stock becomes an offensive weapon. It is an evil that will literally rip the guts out of our financial markets. This type of market manipulation was once considered enemy number one of the financial markets. And in fact, at least part of the reason that the Securities and Exchange Commission was created was to fight this evil. But over time, we relaxed the regulations that protected our stock market, and we came to accept this behavior as normal. So let me start at the beginning and provide some background. Now, back in the early 1970s, I was a cub broker out in beautiful Santa Barbara, California. I know, tough duty. Santa Barbara back then, as it is now, is the home to many retirees. And so most of my clients then were older. In fact, many of them lived through the crash of 1929, which was just a little over 40 years earlier. And that sentiment that I gave you at the beginning is an exact replica of exactly how these people felt about shorting. To a person, they considered shorting stock to be the major contributor to the great crash. If ever I brought up the subject, they would often launch into a rant about how Wall Street operators drove their stocks into the ground, how unscrupulous speculators manipulated the stock market. And these weren't the rantings of just a few old investors out on the West Coast. This was accepted wisdom on Wall Street itself. While studying at the New York Institute of Finance, I would find my professors sharing exactly this sentiment. And what specifically was the type of shorting that everyone was talking about? Well, it was exactly the kind that we saw being used against GameStop right now, and that we saw the gang from Reddit working against. It is when a group of large investors, today they're principally hedge funds, back then in the 20s they were called pools, but the strategy is exactly the same. Select a weak company and then sell their stock as you drive the price of the company lower and lower, all to the profit of those speculators. Now, the cost to the unfortunate company is often bankruptcy. The years of sweat and toil that went into creating a viable enterprise, all gone, all to the profit of the short sellers, today those hedge funds. But it doesn't have to be like this. In fact, up until a few years ago, it wasn't like this at all. For many years, we had laws in place which protected our investors and the GameStops of this world from just this sort of offensive short selling. But in a flurry of deregulation, we let the wolf back into the financial henhouse. The first thing that we got rid of was a clever little device that prevented these offensive short sellers from pounding those waves after waves of selling. It was called the uptick rule. In the uptick rule, a short sell could only be executed when the last different price was an uptick, that is, when the price of the stock traded higher. Now, a technical note. Back then, stocks traded in eighths. So this really meant that a stock would have to move up 12.5 cents before you could short it. Wave after wave of selling was impossible. You could sell, but then you had to wait for the buyers to come back in and tick the price up before you could sell again. Clever, no? For 60 years, this was a principal tool that we used to protect our financial markets. Investors, and underlying stocks like GameStop. Unfortunately, we gave all that away back in the mid-1990s. Now, the other strategy we used to curb excessive speculation was the use of margin itself. Today, we assume that initial margin is always just set at 50% and doesn't move. Well, again, this hasn't always been the case. Back in the very early 1970s, regulators judged that there was excessive speculation occurring in the markets. And believe me, speculation was tame back then compared to now. And of course, speculation then did not include the type of shorting that we're currently seeing. That was effectively outlawed. But even so, regulators were quick to raise margin rates at the mere sign of excessive speculation. So when I began as a broker, initial margin, that is the amount of cash you needed to put down to buy a stock, was 65%. More cash down meant less leverage and less speculation. And this is just what the Depository Trust Company has done recently. And many have thought that DTC was a bad guy working for Wall Street and against the Reddit gang. But nothing could be further from the truth. DTC has recognized that the brokers and hedge funds are way, way out of line, and they're trying to bring them back in by using one of the few tools they have. Remember, the Reddit people are buying for cash, I assume, so they don't really have all that much margin requirement. And in any event, the mere fact that over 100% of GameStop shares are currently short says loudly and clearly that some of the prime brokers who support these hedge funds have violated securities regulations. And DTC is merely pointing that out while trying to protect investors. So there you have it, a brief history of this plague of weaponized short selling. Our country has a very long history of fighting exactly this evil. In economic news today, Redbook has reported disappointing retail sales for January. In earnings, we had positive results from Pfizer, the big drug manufacturer, ExxonMobil Oil Company, and of course UPS, which continues to chug along with lots and lots of home deliveries. Disappointing results came out of China, with Alibaba reporting down. Also, BP, British Petroleum, had disappointing results. The really big earnings reports today will come after the market closes, when both Amazon and Alphabet Google will release their latest results. And that's our look at Wall Street for Tuesday, February 2nd. I'm David Ravel. Please join me in praying that our country may get back to work.